Well, it gives me always a great pleasure to showcase and talk about the great franchise what Motilal Oswal Securities has been. You know, when I started my career as a financial journalist, the Sensex was at 4,000. Today we are at 60,000. But Motilal Oswal Securities and Motilal Oswal Group per se really has been a beacon of success. From an unknown brand to an unforgettable franchise, what a great journey it's been for both Motilalji and Raamdeo Agrawal. So today we'll talk about numbers, markets, stocks, and the QGLP strategy, how that can be applied in this kind of a market. So, Mr. Agrawal, always a pleasure to have you, Niti, now. Thank you for joining us. I was just counting that it's been over 20 years I've been interacting with you now. It is so fascinating when you look back and say that, at least when I started my journey as a financial journalist, the Sensex was at about 4,500 to 5,000. Nifty was in 3-digit. And now everybody's talking about 1 lakh for Sensex coming either in 4 years or 5 years.
That's unforgiven. I mean, I started my career at 100 Sensex.
Really?
Yeah, I bought my first stock in 1980. That time it is supposed to be 100. So today it is 65,000. So I have seen 650 times of the market. And it's just going on. There are always up and down, massive up and down. But if you take a 5, 7, 10-year view, then there is never a crisis. There is no mandi at all. There's always a 10, 12%. In very good time, 10-year will give you 17, 18%. In very bad time, like if you start from very high, it will give you about 12, 13%. So I think making 10, 12% is easier than what looks to be. I mean, you don't have to do too much effort to make about 12% in Indian markets, rupee pre-tax return. You just buy the index and forget it, you'll make 12%.
So the starting point is today?
Yeah. So I don't think you are in for 17% return. I would consider that it will be safely 10, 12% types, 12% I would say.
So let's divide the market into perhaps 3 parts. Underrated and a pocket where there is scope for P expansion. Second, P expansion may not happen, earning expansion is evident. And third, where scope for earning expansion is limited and P expansion has already happened.
Yeah, so always, this so-called growth frontier, I mean, we have tons of them.
Yeah.
Above 50 P multiple companies are there. So wherever the growth will disappoint, their multiple will contract and the earnings growth will be slower than what the market is expecting. And hence there will be continuous disappointment. Market will keep derating the multiple, and so that's the most exotic part of the market, which is most talked about, but that's where the maximum disappointment happens. The best is the middle, where I would say there is a sustained earnings growth and it is not re-rated big time. There is some semblance to the, say like banking, I would say. Still, banking is going full blast, but the P multiple is not very high if you look at it. So you have a good chance of making, wherever you have an insight about 20-25% kind of growth, there you can make decent money. In fact, market beating returns you can get there. Then you have the other one where actually it is not growing and below mean, 10, 12 P multiple is there, and either the companies are not discovered, they are smaller companies, they're not discovered at all. And there you have opportunity to bring that story into the market and not only get the earnings growth of 25%, but also doubling of the P multiple now. And that's where the maximum excitement happens, where stocks are below P multiple, but most of the time below P multiple stocks are there for right reasons: bad management, bad capital allocation, no growth, company doesn't have very clear strategy, or even the industry is going through some bad patch. Management have fight or legal issues and those kind of things. So in that kind of situation, market, they don't want to be piling on to those kind of counters. So there you have the P derated or say 10, 12 P multiple, or the stories which market doesn't know, because someday market comes to know about it. And that is where the discovery happens, and that is where the real research works, where people like us or we go and meet the management and we figure out, my God, what is there in Chandigarh, what is there in Rajkot, what is there in some other place. So that allows us to do a lot of groundwork, go there, see for yourself what the management is and what they can do, and see what happens is, if your market cap is not 5, 6, $1 billion, say, it is not a serious institutional stock. Okay, it is at best HNI or retail. That's where I think maximum opportunity is there for you to find the stocks which are not known to the market. And there also nowadays, thanks to so much of activity in the capital markets, there are not many companies where people have not reached. People have reached, and hence it is becoming day by day difficult to find those undiscovered stories.
You like to quote Buffett, I like to quote Raamdeo Agrawal. So I'm going to quote you something what you've discussed in the past, that Sasta roye bar bar, mehenga roye ek bar. Where is this mispricing in the market?
Actually speaking, it is the toughest thing to find as a category, big mispriced. I mean, I would think that PSU as a stock, as a basket, was the one very large, concentrated, now profit making. I mean, in PSU, one of the biggest problem was the PSU banks. Now they were actually incurring losses as an aggregate, except for SBI. In fact, 1 year even SBI made loss. So there was a serious loss till 2 years back. I mean, 2021 till 21. Now this year, I think they will deliver record profit. I think it will be upwards of 150,000 crores or maybe 2 lakh crores.
SBI?
No. Total PSU as a basket.
SBI itself is 40,000 crore for the last year. Maybe it will be cross 50.
No, it will be 50-60,000 crores. So I think it will be upwards of closer to about 1.5 lakh crores for the PSU banks themselves. So that's the kind of transformation we are talking about. So that's one group, entire PSU baskets, whether it is oil companies, whether it is banks, whether it is there are a whole lot of consolidated monopolistic. Defense also they have become the real blue chips. So, but that's where you find 10, 12 P multiple companies and large in sizes, and so. But otherwise, I don't see anywhere below 15 P multiple and where you have a good chunk of earnings. Those kind of stuff is not there.
So I'm going to talk about your numbers because we're talking about financials.
Yes.
Now, for the quarter gone by, capital market revenue, which is a combination of M&A activity, IPO, that is growing 18%. That's a function of market cyclicality. But asset management business, which in a sense has been the core differentiator for your firm, there is a drop. A lot of restructuring is happening within the asset management business. I'm going to start with asset management business because that in a sense is the hallmark pet project of Motilal Oswal Securities, a new business which has become a high growth business, and now there is a little bit of churn happening at the industry level. What's happening there?
No, so see, basically Motilal Oswal is still a 70% capital market side, like broking and iBanking and those institutional broking, retail broking and institutional business. That's about 70%. 30% is asset management, private equity and public equity. Now in public equity, there is a kind of a, I would say, MOMC version 2, where I have taken a little more backseat and a new management team in the name of CIO and Naveen and Prateek and all those guys have come. So there is a fundamental change in our promise to the investors. Earlier we were like my style of big chunky positions and things like that, and there the promise and the effort was to be the highest return funds. That's how we came into being. And now, but when you have the highest return fund, you always have highest underperforming funds also, because you can't be God. Like
Cycle always
4 years you did very well, so 2-3 years you did very badly. But to sustain that in public environment, because all kinds of people come, and some people come at, let's say, high and all. So there is a pain among the public. So we have said let's moderate that expectation, and instead of highest return, let's make it a little more consistent return.
The next generation from the promoters is part of Motilal Oswal Group in different roles now. My question is that, is there a change of guards waiting to happen? I mean, because next generation has joined the business, and what is their vision? Are they committed completely like Motilalji and you are committed? You've created the franchise. The next generation is part of the business now. Sometimes next generation becomes parts of the business. Sometimes they do not become part of the business. What happens next now?
See, let me say Motilal Oswal today is the foundation day of ours. Okay.
Oh, congratulations.
So, yes, thanks. So
how many years today?
This is 36 years.
Okay. Arey cake manga lete, pata hi nahi tha.
So actually, in a way, it is a built to last.
Okay.
It is not dependent on neither Moti nor Raamdeo, nor my son or his son. It is a machine we are trying to create, which survives and which prospers as the time passes. Because I see for next 25 years, beyond that, what to talk about. Even 25 years long. As I said, the total savings in the last 25 is 10 trillion, 10, 12 trillion. Next 25 is going to be 100, 150 trillion. So the opportunity for capital market is immense. The savings, the wealth, the broking opportunity, the asset management opportunity, the private equity opportunity, seed opportunity, you name it. It's humongous, as much as you can do. So our job is to do well. It doesn't matter whose name is written as a what you call MD, CEO and all. The stock certificates are in their name for sure.
Of course.
Ownership is with them. So they will do whatever they can do best. They are both of them are in the company, and so yes, they are integral part of the company. They are doing well. They are being groomed up. But it's not that the leadership role is going to be completely dependent on the. And first thing is we are there, and Motilal is
of course.
You've seen
you put
his
the hands on,
execution.
completely.
So he's there still. So we'll talk about it maybe 5 years henceforth or 7 years henceforth. By that time, these kids would have also become something more senior.
I mean, Charlie's still alive and kicking. Buffett is still managing at 92.
Yeah, but really important thing is how well you delegate. So you delegate and yet don't run away from the responsibility. So still taking the ownership of what you're doing, but yet don't do anything.
Mr. R.C. Bhargava made a very nice comment about 6 months ago, and his view was that the butter from the bread for the auto industry is missing if you're in the small car segment. Will that hold true for the entire financial intermediaries also? Because the AMC business, the TR is changing. Distribution business, well, there is a zero dha model and there's a Reliance waiting to disrupt. So while the size of the opportunity is very large and everybody will see a growth, but in terms of the butter is missing now.
No, you have to change with the time. See,
how will you change with that?
Yeah, we have changed. You see, this is 36 years. We started as a sub-broker. That time we used to I personally used to take the share from the brokers on behalf of Patawad, what we used to call 10 Reliance, 20 Bajaj Auto. I have physically kind of received. So from those days, we have come to a stage. Yesterday, I think total nominal value of the turnover of NSE was 562 lakh crores for Thursday expiry. What are we talking about? T+1 settlement. And now regulators are talking about probably same day settlement. Means like your stock is a cash certificate.
Not you get the money immediately. You get the money immediately.
In any case, you are getting 24 hours, which is not bad. I mean, earlier even draft you are not getting for 24 hours. Today they are saying that if you sell same, there's a possibility. I mean, it's not a zero-sum possibility if the SEBI chief is talking about it. So what I'm saying is where we have reached and where are 500 brokers? There are only 20 brokers. You have to find your niche, what you do well. There are all kinds of customers. There are customers at zero brokerage. There are customers at $20. There are customers at whatever we are charging. So the issue is that do I deserve to get what I'm getting? Are we servicing to the client? Is my positioning very clear? Because the smaller client, newer client, they will go to the this online and all. But people like us or the people who have more than 100 crores, 500 crores, 1,000 crores, I don't think they are going to say go and buy 200,000 Reliance in some online stuff and all. They want the brokers to work around that. They want that lots to be found and some other company, So there are a lot of work to be done by intermediaries. See, stock market is not about, I am of the firm belief in a stock market you cannot make money without guidance. See, you and me, we are children of what you call financial markets. But the millions and millions of guys who have wealth, they are not masters of stock market. It's a complex from their point of view. And they need guidance. They need hand-holding as they traverse through the journey of becoming from 100 crores to 1,000 crores or lakh crores. So I think there is a role to play. Whether we can play that meaningful role or not in advising, advisory-based broking, or everything is about advisory. We have maybe 5,000 advisors across the country. So we cater to 96% of PIN codes. So there is a unique positioning for us, and but the whole issue is about the quality of execution.
So you don't feel that you've left behind in the digital age? Because if I look at...
No, we are as digital. Nikunj, mind you, my digital process is not even a bit different from others. It's just that my business model is different. But technologically, I am as sophisticated as anybody. You can go and check. But what happens in my office? Nothing. If I am doing 2 lakh, 3 lakh crores turnover, I can't be doing from my cabin. It is happening across 25, 30,000 terminals. And then 80% is mobile.
Now, I just want to bring this point for the benefit of our viewers that we underestimate the kind of model you followed. you've followed a growth of 20% plus, which means ganit karte hain. 10 years mein 10 times, 20 years mein 100 times. HDFC Bank model. That's really been the growth for Motilal Oswal. Motilal Oswal Financial Services. Will I be off the mark if I say that you think that for next 5 to 10 years, the growth is going to be at least in and around your historical averages? See, 20 becoming 17 or 17 becoming 18 is okay. But in terms of the growth which you've seeded for the organization for the next 10 years, will it be in line with your historical averages? Because if the size is so great, then at your base, growth of 15-20% should not be difficult.
Yes. So, it all depends on what the market does finally. I mean, because my 2/3 are actually out of 7,000 crores, almost 5,000 crores. So, almost 60% of my capital is in the treasury, which is nothing but equity, all sorts of equity, private equity, public equity, direct equity. If market remains say flat, obviously my return will be coming only from the operation side. But as a one away. So if I see last 8 years, my net worth has compounded at the rate of 22.5%. So there is no reason for me to believe that it will be any different. It can be better somewhat. It can be, so the band will be anywhere between 20 to 25. And then one thing which we have still not realized fully, of course you keep getting, is the power of net worth. In financial markets, your power of net worth is everything, because the price at which you can borrow, the kind of deal you see. We have the guts to do the equity deals. You get me a company, terrific story, you say, sir, this is the price. I'm say I can bid for 10%, I can bid for 20%. That capability I have, but I have limited amount of money. Tomorrow when I have larger amount of money, even better deals will come to me. So that part of the equation will shape up as the net worth keeps building up. From current 7,000 crores this quarter to maybe 14,000 crores in next 3 to 4 years. I would think that by 2027-28, we should be about 14,000 crores in net worth, not market cap. Market cap is...
That's a function of market.
Market has decided what price to book they want to give, 1, 2, 3, or even less than 1, I don't know.
If you as an investor, you see a business exactly like Motilal Oswal Financial Services, what price to book you will give it to that business?
I think let's not get into that. Because market will always defy whatever is my experience. But 22% ROE, 22%, in fact, ROE is more like 25%. But because we pay out dividends of 25-30%, so net of dividend, my book growth is more like 22-23%. I think it is not a one book company.
And it's not like a leverage balance sheet. I mean, unlike banks which are very leveraged.
No, there is some amount of leverage because we do give some funding to
unlike banks. I'm saying unlike banks.
No, it's not like that. It's not like that. I mean, we will never cross. I mean, we will, except for that HFC, which is going to be separate company altogether. For core operations, for margin funding and all, I don't think we are significantly going to cross one-time net worth. And that's what I'm saying. If your net worth is 20,000 crores, you can go and knock the door of the bank or NBFC and say that give me 20,000 crores. But if you have only 7,000 crores, you can ask for only that much. So that also limits how much business, what size of business, what size of the clients you can cater to.
So if I'm going to shift gears and talk about now Raamdeo the investor and his view for next 3 to 5 years. One is financials, which you're bullish on. What else do you think will become, which is small or medium right now, could become large and big?
As an industry sector, you're saying?
Earnings. Where do you think earning pools is likely to grow? I mean, what happens to market cap? What happens to macros? Nobody knows. You've tried to predict the earnings based on a model which is QGLP. So based on your model and understanding.
So that's what I'm saying. All the businesses, even the old businesses which are powered by internet, who are the businesses which are exploiting the power of, see, there are pure internet companies like say Zomato, Swiggy or Policy Bazaar. They are designed around internet. So they have a great chance to, if they execute well, they will become very large. Maybe not in 1 year, 2 years, but if you look at say next 5-7 years, I think they will become seriously large players in terms of profit pool also. That's my expectation. Nobody has delivered so far, so we have to see that. So that is one exotic, high growth, high probability event. It has not happened. So that is one frontier. Second is the say like Bajaj Finance kind of a company, which are traditional lenders, but using the power of technology. Say even the broking, where it has become all digital. Actually, the purest possible digital businesses in India are the broking companies.
Yes.
You know, whether it
KYC
is
is
Zerodha, whether
online,
it is
or execution
Angel
is
One.
online, yeah.
In terms of execution, we have still got lot more. We are a lot more phygital, I would say. Phygital infrastructure is there. Our lot of value is not coming from execution; it is coming from advisory. So we are phygital. But Angel One, your Zerodha, they are pure digital companies. So and they are growing rapidly. You know, they become very large, seriously large. So you know, you have to really start seeing where all accelerated growth we can find, because multiples are pretty high. You're talking about 20, 25 and all. So clearly market is building in significant amount of growth. So where is the growth differential you can see? You know, and then like among the traditional business, like real estate is very small compared to, I mean, multiples are high, but if you talk about the total profit pool, practically nothing. Till last year they were like loss-making types or no profit. Now current year 22 they have shown some profits. So that is one area where I think you can see if you're a good promoter, sensible guy, they don't go out of after seeing the current terrible thing. I think 8-10 years they are good. I don't think they are going to get into. They'll commit mistakes again. Maybe new kind of guys will commit mistake. But I think this is going to create a huge industry. Then one other thing which is happening is post-COVID is health insurance policy. And there is a huge growth in health insurance, and now insurance regulator is out to grow the industry very rapidly. They want in next 15-20 years that 100% coverage in the country. So that can happen only if there is a rapid growth in the industry. So that's happening. And that is leading to a lot of consequences. The hospital industry is growing. Now everybody wants to go to good hospital. If you have the policy, then why should you go to nursing home or something? So there you are seeing a lot of boom, and that's why you see how many IPOs have happened in hospital sector.
Pharma is doing well, domestic pharma.
Yeah,
You'll buy better medicines.
Yeah, so I think
so
there will be. So you have to see in a growing economy of 6-7%, you need a good entrepreneur who can execute and grab the market share from whichever industry he is in. And there is an industry tailwind. So like in financials, about 14 to 15% is the industry tailwind. And in that, can you grow at 1.5x or 2x? And then you are sorted. And other places, the growth might be a little slower. But today you see Nestle result. Nestle and
HUL also numbers were not great.
Numbers were not great. No?
Volumes were contracting.
But Nestle number is very good. And there is another one today, I think.
Tata Consumer was just about okay.
No, there was one more. There were 2-3 good results, like this Westlife was good.
Yeah, but they're expanding
two, there. And there was one more consumer company result which was very good.
Colgate was decent.
Colgate is outstanding result. So I think you are going to see some of these consumer companies also, because to create these franchises are very tough, and they are monopolistic. And all the products and pharmacy, your consumer product, FMC, thanks to delivery mechanism and now social media and internet, all these products are finally reaching the tier 3, tier 4 and almost you can call villages. So the distribution is expanding big time, and the benefit of that you see in the years to come as the economy recovers from COVID shocks.
One final question, and this is something which again I'm stealing from one of your wealth creation studies, value creation and mega trends. Everybody is excited about EV. Some are excited about energy transition. Everybody is excited about manufacturing, defense, electronic manufacturing theme. One of the mega trends which you had bet on was two-wheelers. Another mega trend which you had bet on was consumption of private bank, PSU banks becoming public bank. Government telecom companies losing market share to private telecom companies. What is that next mega trend according to you? Maybe 1, maybe 2, maybe 3. If you can
I
share
told you, we talked about it, the digitization.
That's an obvious trend.
No, not very obvious.
Okay.
You know, a lot of businesses will see the companies which can digitize themselves, those who can harness the power of technology. They will go forward so much. The existing stable big guys, they'll just keep watching. You gain market share in banking, which is like a giant 4 lakh crores kind of a profit pool. In that, from less than 1%, they'll go to 4-5%. In a growing market. That is going to happen on the back of this digital power. So you have to keep watching. Business could be old, but who is the guy who is able to harness the technology?
Let's hope that happens, and I think that's how capitalism and markets work. Appreciate your time. Always look forward to our interaction, and thank you very much for your time.
Very good. Thank you. Have a great day.